Hi everyone, and thank you for tuning into my channel where I talk about stocks, the stock market, and investing. I post videos daily, so if this sounds like something you want to get more of, please subscribe down below. In today's video, I'm going to discuss why Amazon's stock split should not be any reason for you to change your mind on whether or not to buy or not buy the stock. Okay? Now, to get started, I'm on the web page here for Amazon's proposal for an approval of the amendment to the company's proposed 20 for 1 stock split in its common stock. Okay, so this is direct from Amazon's website, and what they were asking shareholders to do, and I've highlighted that here, is for to approve a 20 for 1 stock split for the company's common stock, along with a proportionate increase in the number of authorized shares outstanding from 5 million from 5 billion to 100 billion. And the it would be the first sentence, and a lot of legal jargon here, but what they were asking shareholders to do was to approve a 20 for 1 stock split, and this was a few months ago, and so if you're already aware, this proposal was approved. And what I would like to point out here, when during a company's stock split, what happens is they take whatever number of shares were outstanding, and if it's a 20 for 1 split, everybody gets 19 more shares. So if you held one share, you got 19 more shares, and so now you get 20 for each one that you had. However, that does not change your proportional ownership of the business. So, for instance, if you owned 1% of the business before the stock split, you would own 1% of the business after the stock split. So if the company made 100 million in profits and you owned 1%, you would be entitled to 1 million of the company's profits. And so before or after the split, you're still entitled to 1 million of the company's profits. Your fundamental position as an investor has not changed. And that's one of the reasons I say that it should not change your opinion on whether or not you should buy or not buy Amazon stock, because the stock split hasn't changed your fundamental position. You're still entitled to the same percentage of the company that you were entitled to. So that raises the question, why did the company do a stock split, or why do companies do a stock split? And so let's read further down below to try and get more information on that. Okay. And oh, how wonderful! Amazon tells us the purpose and the effect of the proposed stock split. So it says the board anticipates that the increase in the number of shares outstanding will reset the market price of the common stock. In other words, it's going to decrease the common stock, right? If it was trading at $3,000 before the stock split, it'll be trading at 1/20th of the price after the stock split. And the resulting decrease in the stock price, the board of directors says, would give their employees more flexibility in how they manage their equity in Amazon, and it would make the common stock more accessible for anyone who wants to invest in Amazon. In other words, if the stock price was trading at $3,000 before the split, that may have put a share of Amazon out of reach of some investors who may have only wanted to invest $200 or $300. That said, most brokerages allow for investors to buy fractional shares of a stock. So you could have still spent $300 to buy Amazon stock, but you would have gotten zero point 0.1 of a share instead of getting one full share if the price was $300. So you would have owned fractional shares of Amazon instead of full shares of Amazon stock. However, the end effect, the end result of that would be negligible for most investors. So the price of the stock falling from 3,000 to 100 or wherever it may have fell from before to after the split should not have made too much of a difference with regard to being able to buy Amazon or to would be able to invest in Amazon, because investors were still able to invest in Amazon whether they wanted to spend $10 or $10,000. You could have still invested in Amazon stock even before the stock split when it was trading at over $3,000 per share. The other reason Amazon points to why they wanted to do a stock split is because it gives employees more flexibility. Now that so if you're an Amazon employee that's paid with stock-based compensation, you may have much of your wealth or more of your wealth than you would like in Amazon equity, right? So you may be paid in so much Amazon equity that, 60 or 70% of your wealth is tied up in Amazon stock. And that might be an undesirable scenario for many employees of Amazon. Because you think about it, if you're an employee of Amazon and should Amazon face some sort of downturn, you may be at risk of losing your job. But oh, by the way, at the same time, if 60 or 70% of your wealth is invested in Amazon and they face a downturn, the value of your investment is also likely to fall. So you're at risk of losing your job and at the same time, the value of your investments decreasing both at the same time, simultaneously, which is an absolute horrible outcome, right? Imagine you lose your job, you want to rely on your savings for the next few months until you land somewhere else, but the reason you lost your job, a downturn in your business, is also the same reason that's going to cause your portfolio of wealth to fall. And so employees would prefer to have more flexibility with their equity ownership. And if the stock price is, $3,000, over $3,000 versus less than a few $100s, that gives employees more flexibility in terms of, when you're trading in the options market, typically those are traded in lots of 100, and it's harder to do fractional trading in that sort with prices that are so high in the options market. So by having a lower price, it does give employees more flexibility to maybe sell some call options, excuse me, or to buy some puts, to go into the options market and trade around their position to kind of lower their risk in Amazon's, lower their risk uh, in relation to Amazon's equity. Okay, so that's a legitimate reason why Amazon would want to affect the stock split. All right, when we read further, they talk about that the increase in the I'm sorry, let me go. The stock split also increases the proportional shares outstanding. So it went from 5 billion to 100 billion. So there's an additional 95 billion shares because it did the stock split. So it proportionally ownership does not change. So that speaks to, excuse me, that speaks to the reason I pointed earlier that your ownership does not change, your fundamental position does not change, and the fact that more investors have access to Amazon stock, or the fact that equity owners or employees have more flexibility in how to trade their options, it shouldn't have a material impact on Amazon's ability to generate profits and free cash flow. And for that reason, it shouldn't, an Amazon stock split should not change your opinion on whether or not you should buy or sell the stock. Okay? Now, it does create some momentum around the stock as it creates a lot of hype and a lot of investors become interested. There's a lot more discussion, a lot more articles, a lot more videos, and so all of that extra interest may create a short-term boost to the share price, but longer term, the stock split doesn't generally create any more wealth or any more value for shareholders. And so it shouldn't be any reason for you to invest or not invest in Amazon stock. Now, if you're interested in knowing whether or not Amazon stock is a buy or not, I have another video on my channel that goes into greater detail discussing Amazon as an investment and whether or not you should buy it. So if you're interested in that, I recommend going to my channel, looking on the playlist, and you should find that relatively easily. But for now, this video, the main takeaway is don't change your opinion on whether or not to buy or sell Amazon stock because it implemented the stock split. All right, thanks for watching. I'll see you again soon.
I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular Stock Advisor. Stock Advisor has beat the market by more than 250%. Go to fool.com/Parkev to get your 10 stock picks now.